Hi everyone, this is an investment update on some of my favorite assets in gold, silver, and Bitcoin. Right now, the market is an absolute mess. Right now, it's very hard to read where anything is right now, and I just wanted to put this video together to show my personal views, looking at the numbers and seeing where I think things are right now. So here's where I want to cover. Number one, a general market update plus where the Fed's at and what their next move is going to be. Number two, why silver is still the number one asset to keep an eye on and hold. And number three is a Bitcoin update. So in terms of general market update, the big news right now is on the Fed. We know that on December 9th and 10th, they're going to be having a meeting where they're going to be deciding on their next move, whether a rate cut is on the cards right now. We know based on inflation numbers, which were down a touch more than expected, that a Fed cut is now likely to be on the cards. Not guaranteed, but pretty likely. If we use any kind of Fed watch source, we're seeing that numbers are around about an 88% chance of a Fed cut, rate cut, which means that we're going to be seeing things going down and we're going to be seeing some form of quantitative easing. And generally, US stocks are rallying pretty well based off this news that the rate cuts on hand, and things are looking pretty good and very optimistic in terms of what investors are thinking. But there's still, I guess, a lot of mixed signs on what's happening. The state of the economy is still pretty unknown. I mean, the news that came out in Japan about their 10-year government bond yield was pretty spooky, and that's scared a lot of investors in terms of what this news is. And what the government bonds yields are, that's basically the returns of the bonds, which the Japanese reserve gives out, and it basically returns an amount of value, and it usually determines the cost of borrowing money. Now, for a long time, as you can see, the Japanese bond has been close to zero, as you can see here. And what used to happen was a lot of American investors would borrow money from Japan. They'd rotate those assets into US dollars and then buy stocks and be able to get returns with borrowing, which was basically didn't cost anything, and it made it really easy to get asset returns since borrowing costed nothing. However, it looks like the party's over now and borrowing costs money. And that's spooky because what that means is suddenly all the debt that's been accrued now costs something. And in order for that to be paid back, it's very likely that the US investors would have to sell some assets in order to pay off their debt. Overall, I just want to say this. The economy as a whole has never been more confusing. I have very little trust in data right now. I mean, values like the CPI is an absolute joke. Unemployment rates, I don't trust where the economy stands right now. I think signals are very mixed, and it's very hard to get a proper read on where things are right now. Yes, a Fed rate cut will be in hand, and that's great, but that doesn't really say anything in terms of where the economy is right now. And there's a lot of fake news and a lot of speculation going around right now. So I encourage investors to be patient and build long positions, and that's what I want to cover a bit more. Now, in terms of silver, which is probably the asset which I love the most, year to date, it's gone up nearly 100%. It had a pretty fantastic year. Now sitting at $57 US, and it just had a pretty big round where it went up massively in the past month. It was around $50 US, now up to $57 US. It's been a fantastic investment. And the news was that a lot happened in terms of the COMEX, which shut down briefly as it skyrocketed silver. Some people say that the COMEX went down because of silver, because of how quickly it went up, and they wanted to switch it off so it wouldn't go up any higher. Make what you do with that. I don't know if that's a solid conclusion, but it's just news going around. But at the end of the day, the fundamentals remain the same. This is an asset which has everything going the right way. And what it does in the short term, whether it goes up and down, let's say it has a correction, I'm okay with that because I'm happy to sit in this long term. And I know down the line, that next 5 years, this will be a fantastic asset to hold in and continue to accrue in. And I know that this is going to work really well. And the numbers behind it are pretty simple. Firstly, I like this chart here. It's silver adjusted for CPI, and CPI, that's a false data source. We already know that that number is much lower, the CPI value, compared to what it actually is. And what it means is inflation is basically a false number based on how much is printed in the economy. But let's adjust inflation for where the silver price is right now. You know that 1980s peak here when it hit $50 US. So that was a much bigger high compared to where we are now, because now inflation is a lot higher. So although we are at all-time highs and everyone's saying this is the peak, silver's still got a long way to go. And I believe that in order to match this previous all-time high, silver needs to get to at least $200 US in order to match that previous all-time high. I still believe it's massively undervalued. And although maybe it might not be a straight parabolic move to get there, 200% it will get there within the medium term. And that's why I like to hold this asset. Now, some of the reasons behind why this is such a good asset is pretty simple. We know the industrial demand is still there in silver. Solar panels continue to be required, and this requires massive amount of silver. We're seeing that what's happening is the amount of silver that's required in these solar panels is increasing as the design continues to improve in these solar panels, as well as just general technological advances. We know what's happening in the space with AI, with computers, with computer chips and everything else that's involved. Silver ultimately fuels these technological boosts because of its properties. We know what it can do with conductivity, we know it's required in computers, and we know it's required in electrical systems. As we continue to advance in these areas, we're going to need the silver supply available to be able to back any of these kinds of systems. And ultimately, it's part of the reason that we're having such all-time highs right now. The demand really is here in this asset, and the issue is demand continuing to increase in silver on a fundamental level, but supply is pretty stagnant. It's not matching the increased demand that's in silver. If we go over the balance sheets, we can see that there's some massive numbers and massive deficits in silver. To make things even worse, we're now starting to see whole nations that are starting to run low on silver. We've heard that China's now hit a 10-year low, and there's rumors going around that the reason why this was because the London bullion market essentially borrowed silver from China in order to get its stockpile up again, because there were news that it hit an all-time low as people called in silver from their ETFs. Now, the reality is, right now supply is tight. You can say it however you will. It's very unsustainable how things are functioning right now in the silver market. Maybe the London bullion market did get more silver. Maybe it didn't, because I honestly don't trust them anymore. The amount of manipulation that's happening in silver is just ridiculous. We know that spoofing's happened in the past before, where prices are manipulated through paper silver. But whether the supply is actually there in silver, I'm unsure. But looking at the numbers and looking where this squeeze is at, and just basic supply and demand, the price of silver is too low compared to where it should be. We know there's an increased demand in it. And naturally, if you have low prices in an asset and basic supply and demand concepts, it's going to tell you that you're going to be in a deficit state. And that means that supply isn't going to be available. The other thing which I noted was that the smart money hasn't really moved into silver yet. We've noticed that there's been a lot of hype and a lot of Federal Reserve funding towards gold. That's where a lot of the money is moving, a lot of smart money. But silver continues to be kind of unloved. And generally what happens historically is gold hits a point where it's too expensive. And when gold runs off too high in value, silver often has forced to follow it as like the poor man's gold. And what happens is it generally follows. When this rotation occurs, I don't know, but even a 0.5% increase in investors moving towards silver would create a huge increase in demand, because industrially, we're seeing the demand in silver. But I believe in terms of retail investment, I still believe silver is very much slept on. Gold to silver ratio also shows that silver is still pretty undervalued. Generally, when silver peaks in value and it hits its high, we see this gold to silver ratio go down to about 30. It's pretty simple. The gold to silver ratio tells you how expensive is silver relative to gold and how expensive is gold relative to silver. Generally around this 80 period up, we're saying silver's heavily undervalued. And a general average is around 50 to 60. So 70, we're still pretty high. And it means that gold is still pretty overvalued compared to silver. So we're definitely not peaked in terms of silver yet. It's not an overvalued asset. To me, it's very undervalued. And what happens in the short term, I'm not too concerned about. Whether it dips in the short term and it goes down or whether it goes up. It's a volatile asset, but I encourage people to hold long term, be patient. And another image I'm going to put on the screen is the gold to silver ratio inverted. So it's that same chart that we see before, but now I've inverted it. And it basically shows you what does silver have to do to return to its previous highs. So looking back in 1980s, we can see that the gold to silver ratio got to about 14. Now, in order for it to go back from that 72, 73 value to 14, it would have to move 5.2x, meaning silver would have to increase in price by that much, or gold would have to decrease by that much. But I don't think that's very likely. Gold's a very stable asset. But the movement that'd be required to get back to that value is just ridiculous. And it would mean that silver would have to hit precisely $250 US. That just shows how undervalued it currently is. And in order just to get back to that 30 value, which is probably more realistic in terms of the peak that I see in silver, which we saw around that 2012 period post GFC, it'd have to go up by 2.3x. And we know based off these charts, silver's pretty volatile. It moves quickly, and you can see how quickly these ratios change. Silver's a very volatile asset, and it can quickly go from undervalued to overvalued really quickly. So it's something that I continue to monitor very carefully, and it's something I'll continue to update you on. But what I encourage people to do is build long positions, sit through the volatility, and be able to be patient. Patience is what builds good investors. Now, the other asset which I really love is Bitcoin. I've said that multiple times on this channel. It's something which I've got less exposure to just due to the volatility of the asset, and the amount of noise and news on Bitcoin is just ridiculous. And we don't know whether it's in a bullish or bearish state. We got to around, if we're looking at it on a 1 year level, we saw that it got to that 120k point. And everyone was talking about how it could go to 150 really quickly from that 124 mark. However, it dipped since October 6th and it's come back down to 91,000. It bottomed out at about 85,000. It's pretty mixed on what happens next, whether it goes down further. And people are talking about doomsday scenarios where it goes down to 50,000 or even lower, or could quickly return back to that 120,000. And again, I encourage people who invest, don't build leverage positions, don't look to trade, look to be happy to sit in this asset in the long term because the fundamentals remain the same. If I look at this over an all-time level, the thing goes up and it goes down. It has volatile moments where it's down and it has moments where it's up. But the fundamentals behind the asset are the same. And this is what the fundamentals are. Ultimately, the investment behind this asset is huge. And where you're seeing the smart money move to is a sign of where things are at right now. We're seeing central banks, they continue to move towards gold. But we know that they're starting to move as well into positions in Bitcoin. We're seeing big players who are building strategic reserves in its assets. We know what the US has done, but they're not the only nation that are involved in this. If we look at the Bitcoin holdings by countries and governments, we can see not only is the US involved in this, but as well as China, the UK, Ukraine, Bhutan, and El Salvador have built positions. Now, these are just a small number of nations for sure, and Bitcoin's definitely not something that's as big as gold. Gold has just such a huge market cap and it's massive. And for me, it's still the number one asset to hold. And I think it always will be the number one asset, gold, no matter what people think, because the true safe haven asset. But when I see the smart money move grabs my attention, US has about 198,000 Bitcoin. That's a strategic reserve. They consider that to be a critical asset. Now, that could either be some kind of massive bluff, and you can dig into it as much as you want, but just use some common sense. Why are some of the biggest nations in the world getting behind this? When I say smart money moving into these areas, I know something is going on. And no matter how much noise there is on what this thing does in the short term, I'm happy to hold in this asset and be patient. My exposure to Bitcoin is definitely smaller compared to other commodities. So I'm happy to see where this thing goes in the next 5 years and be able to sit there for multiple years, no matter whether it goes up and down, and be happy with the asset. So patience, that's what I encourage everyone on this channel to be focused on. Don't build leverage positions, don't trade. Be able to invest consistently. If you want more information on styles of investing, how to build assets, and how to work with money, especially if you're in your 20s, I'd love if you subscribe to this channel. I'm helping people to be able to build wealth in assets such as gold, silver, and Bitcoin, just giving you general market updates and thoughts on what I think is going on, as well as if you just want to hear more about my portfolio, I'm giving you the information here and what I think is going on. I hope you enjoyed this video. I hope I gave you some good information, just general stuff to think about. Remain level-headed despite how uncertain things are right now. I hope to see you in another video.